Hi, and welcome to ABG Sandal Collier's Investor Days seminar. My name is Renato Rios. I am a stockbroker here at ABG. And with us today, we have EQL Pharma and its CEO, Axel Schörling. Pharma is a pharma company listed in Stockholm, has a market cap of 1.3 billion SEK, and operates in a niche generics space. Without further ado, please, Axel, welcome.
Thank you so much, Renato. Hi, everybody. What an absolute privilege to get the morning slot here while everyone is still fresh and awake. So I'm told that we're going to get 30 minutes here together. So my plan is that we use those 30 minutes, that I do 10, 12-minute presentation about the company, and then we use majority of the time for interaction and questions. That normally makes most sense. I am here for you. So that's how we do it. For those of you who haven't met me before, my name is Axel Schörling. I am CEO of EQL Pharma since approximately 2 years. I've been with the company for 6 years. I started as COO, then Deputy CEO, and 2 years ago I took over the full responsibility. Prior to EQL Pharma, I worked in both consulting and finance, and I have a master's degree in engineering physics and a master's degree in finance. Okay, without further ado, we look into EQL Pharma. So EQL Pharma was founded back in 2006 by serial entrepreneur Christopher Reus, who is behind companies such as Cellavision and a lot of other companies that I'm sure that you know about. We are a pharma company in Lund, but we are not the typical pharma company in Lund. What do I mean with this? I mean exactly that we have 36 marketed molecules and another 31 in our pipeline. So we are not a research company, or we are not waiting for any data to come in exactly according to our wishes in a few years' time. We have existing sales and we have a strong pipeline. We're headquartered in Lund in southern Sweden, and we have roughly 25 employees. So what does EQL Pharma do? EQL Pharma is a niche generics company. So if we separate those words and try to understand them separately, generics, this is a copy of original pharmaceutical drugs. So when an original pharmaceutical company, they do a lot of research and development, and when they feel they will have a successful candidate, they file for a patent. This patent has a certain expiry time when they can sell themselves to earn all their investment back. After this patent expires, it is legal for generics companies to launch generic alternatives to this originator, copies, basically in plain English. And the idea with this is, of course, to stimulate competition and bring the price down. Okay, so what normally happens when an interesting patent expires is that the price goes down by 98, 99% in only a couple of weeks because 20 different generics companies, they launch at the same time. We call that sometimes the bloodbath, what happens. We, at EQL Pharma, we are not so interested in the bloodbath. So while a lot of other generics companies, they look into the future, try to understand the next big patent expiry, we instead try to look backwards in history and find forgotten old patent expiries where no generic competition at all has come, or maybe just 1 or 2 generic actors have launched for, 30 years, 40 years, 50 years. This gives us a lot of predictability. Both financial predictability, but also operational predictability. So what we do, when we select what products to bring into our pipeline, it is very, very crucial for us that the products are likely to have a very low competition. Because what we have seen in our Nordic markets, when the competition is very limited, you have not a monopolic pricing mechanism, of course, but something that more resembles an oligopoly, meaning when you have up to maximum 4 competitors, it is a very predictable competition in the market. So this means we are very business focused. So this means that we have a wide range of therapeutic areas. We are not specializing in any therapeutic area. We are agnostic to therapeutic areas. And the products we have are prescription pharmacy drugs and hospital drugs. So in practice, what we do is that we spend a lot of time on business development, meaning trying to understand the market and what products fulfill these requirements. Once we have found products that we want to have, we go out in the market and see if we can license in the rights to that product, if there is already a generic dossier available. Most of the times this is not the case, so most of the time we have to develop the product from scratch. And it might sound a little bit strange, develop a copy, what is there to develop? But it's actually a lot more complicated than you would think, since it is a highly regulated business. So it takes, I would say, 3 to 5 years for us to develop a copy and have it approved in our markets. And then we manage the post-commercial phase. Of course, it's very important to do that efficiently. We have existing direct sales in the Nordic countries in our own name and with our own salespeople. Then, in addition to that, we are present in a handful of non-Nordic continental European markets where we have selected different strategic partners for us to sell. And the reason why we are not doing it ourselves is that, EU is, 27 countries, something like this, and 27 completely different pharmaceutical systems. We cannot learn them all. So better be humble and understand that somebody else does it better for us. This is very short, our focus on products. We have 3 segments of products. So we have retail products. These are prescription pharmacy drugs. So you get to your doctor, you get a prescription, you go to the pharmacy to pick up the product, and this is where the generic interchange happens. So I suppose most of you, at least the Swedish people, have sometimes go to pick up a drug, and they say, we have something else, we have something cheaper for you here, can we take that instead? And that is the generic substitution, that is where it happens. This is roughly 80% of our sales for the time being. Second segment is hospital segment. This is for the time being only about 5% of our sales, but it's going to grow a lot in the years to come. And these are products for hospitalized patients that are much more severely ill. And whereas these are mainly, in the retail segment, are mainly tablets and capsules, the hospital drugs are mainly injectables and infusions and so on. Then we have an extremely interesting segment that we call branded. From an investor point of view, I think this is where you should see the big optionality in our company. So the background to this segment is we have 2 molecules that originally were developed as generic towards Nordic originators. So some Nordic originators selling for a certain amount of money, and we want to come in as a generic and take a part of that. And sometime into the process, we realized that these 2 therapies, they are only used in Nordics, not in continental Europe, but they should be. So then we came to the next realization, okay, what if we can establish these as original brands in continental Europe and bring these treatments to new countries? Then we have basically an originator drug at the capex profile of a generic drug. That is wonderful. So what we have done since basically 2021 is that we are selling the rights to these products to different local actors who are much better than we are at doing this. This is today only about 15% of our sales, but I have strong hopes that this will be a more significant part. Looking at some financial targets and performance, we are working, we say sometimes we're joking that we're working in Stalinistic manners in Lund, so we're working in 5-year plans. So we had one 5-year plan between 2015 and 2020 when our target was to grow on average by 30%. We over-delivered on that plan and grew by 34 or 35% in that period. Then we launched a new 5-year plan in 2020 that we soon have graduation time here on that 5-year plan. And there the target was to grow by an average of 40% per year, and we added a profitability target of 25% EBITDA margin. So this is now what we have to deliver in the remaining 12 months to come. And my growth forecast for the 12 months to come is a growth of roughly 40%, meaning that as everything is now, I think that we will deliver on this plan. What is also interesting in the year to come is that we will communicate our targets for the coming 5 years. And for those who follow our company closely, this is something what a lot of people look forward to, because it will sort of set the ambition level. At this point, I do not really know exactly what parameters we will focus on and exactly what numbers we will use, but I can promise that it will be full of ambition and growth focus. Just very shortly on how we have delivered on our targets so far, or since 2017 at least. So the red line here that you see is our sales target as communicated by the external plan on a rolling 12-month basis. And the green bars here is how we're performing versus that target. So you can see sometimes we're a little bit ahead of plan, sometimes we're a little bit behind plan, but we are more or less here on our plan. You also see some light green bars here, and what that means is basically we are coming from a very entrepreneurial background, having our founder and chairman in Christoforeus. We are in a conservative and traditional business, but we still believe that there is room for entrepreneurship and commercial new ways of thinking. So during the COVID pandemic here, we tried to boil lemonade from lemons and actually became the largest distributor of COVID tests in Nordics here for a short while. This is not our core business, but what it did was that it strengthened our cash position in a very, very nice way, such that we could keep on signing new niche generics to our portfolio. So it's a very nice way to see how you can turn a temporary cash flow into a long-term cash flow, is basically what we're trying to do. Very short here, this is just from our quarterly report where I wanted to show rough operational profitability levels, so been between sort of 40 and 30 million SEK here, EBIT for some time here. And now we hope that to see an increase there due to certain launches that will come here in the year to come, which will take us up to the level where we want to be by the end of the year, which is our graduation year. Final picture before we hand over to Renato here. Just a snapshot of our portfolio and pipeline to try and understand a little bit how we operate. So for the time being, we have 36 molecules in the market, and here you can see a little bit how our portfolio, meaning our launched products, developed over a couple of quarters here. So you can see here that in Q4, we have a broken fiscal year, so our Q4 is January, February, March, just for clarity. We launched actually 8 products. If you look on the right here on the screen, we have our pipeline broken down into 2 different ways to view it. First, in the top corner here, you can see that we have a total of 31 products here, whereof some are still in development phase, some are in review phase, meaning that dossier is ready, we've sent it into authorities and they are reviewing. Some are in launch phase, meaning that the approval is there, we have just not launched the product yet. And on the bottom right, you can see how we expect to monetize on this pipeline in terms of time, so when the launches will actually come here throughout the coming years. I think I will stop there and hand over to Renato and, of course, all of you for questions.
Thank you, Axel. Thanks for the presentation. There are a few things that are quite important with or interesting with EQL. Maybe let's start with the income statement, the sales profile and the profitability underneath. So if you look at the growth, you have seen a nice sales growth development over the past quarters and on an annual basis as well. But the gross margin, on the other hand, has been fluctuating quite a little bit. Went from 47 or something like that to 40 in the Q2, and then up to 48, and then down to back to 40. Could you just shed some light on what your target is in general with the gross margin, maybe in the short term and the long term? And yeah, let's start there. What do you reckon?
No, so it is absolutely correct, like Renato is stating here, that our gross margins have been fluctuating in the last 12 months, and there are different reasons for that. The main reason is that we had you could say, a global antibiotics crisis here in the aftermath of the Ukrainian war, leading to worldwide shortage in antibiotics. Quite many of our products are antibiotic products, so we went stock out on 30% of our products, basically. And then we still needed to try to grow by 40%. So how could we keep growing by 40% without having access to our most important products? And they are generally high gross margin products as well. So then we needed to sell more of other products simply while waiting for antibiotics to come back into stock. So this is the main reason, I would say, for fluctuating and generally lower gross margins. Now the antibiotics inventory is much, much better. So I foresee a gradual increase in gross margins here in the quarters to come. We also have this disruption in the Red Sea, you know, where the Yemeniti rebels are attacking freight ships in the Red Sea. This has led to a sharp increase in transportation costs, and this is affecting us with several millions negatively for as long per quarter for as long as this situation will last. So that has also been tough on us. I would say in the long run, our target, or in the sort of short to mid-term, let's say 1 to 3 years, my target is to get to gross margins levels of around 50%. And we are using a functional P&L, so bear in mind, our gross margin, we are also deducting depreciations and write-downs on gross margins. So it is not just sales minus COGS. If you want to see it like that, you have to add like 5%. So by 50%, we mean like 55%. And in the longer run, I see no reason why we shouldn't be able to get up to 55, 60%, because there are still a lot of good products out there. We have been growing a lot. I think we can do a lot in you know, negotiation and COGS optimization and so on.
And I assume that part of this is also entering more branded products, right? Or finding more branded products to deploy and adequate markets to deploy these products in.
You're absolutely right. The branded products in general have a stronger gross profit profile.
Yeah. Switching to the competitive landscape, there are a few companies that do something similar to what EQL does. And could you please elaborate on how you guys at EQL differentiate yourselves from the masses? Is it like, do they look at the same things? You mentioned a little bit that you kind of look at the things that not many look at, but I imagine that there are a few that also do something similar or something very like what you do. So yeah, what is the competitive advantage that you see that EQL has versus other players in the market, and what do you think makes it could be comforting to hear for investors regarding, you know, that what makes you better at, you know, getting these licenses of drugs that actually will sell for a long time?
So if we start with the generic space in general, the absolute majority of generics companies, they have a forward-looking approach, meaning what is the next big patent expiry? Everyone wants to go for the blockbusters. So there you have excluded, and we don't do that. So there we have excluded, you know, 95% of competition already, you could say. There are a few companies in the Nordics who have sort of realized the same thing that we have, meaning that with these old forgotten products, you can have a very nice sales tail and very nice price point if it's up to 4 competitors. This is more or less our realization. But none of the ones, I would say that two or maybe 3 actors are doing something similar, but none of them are doing anything identical. For example, we have Orifarm Generics. It's a huge Danish pharmaceutical company. They turn over something like 15 billion Danish at this point, focusing on parallel import. They had a couple of years where they focused on generics, and they did it really well back in maybe 2015. So we have them now as competitors on quite many products. We have seen a shift in strategy with Orifarm, so they are more or less doing other things. So I'm not super worried about them. Then we have also some other, we have one company here in Stockholm, Evolan, which are doing a fantastic job. They're a private company, but they also not doing exactly what we are doing. They are more focused on acquisitions, more focused on license deals, whereas we try to focus a little more on developing the dossiers ourselves. And I mean, the main, it's a bit of a joke, but some seriosity to it as well. We are a little bit of bottom feeders, you could say, when it comes to these generics. So products in the segment of 500,000 euros up to, let's say, 3 million euros. This is a perfect segment for us because the huge generics companies, they don't bother in this segment. It's too little money for them. So here we can sort of be left alone. to operate. And if the market is too big, we just see it will be a magnet for competition. And the most important thing for us is keep the competition limited. That brings the stability.
And just in that context, what type of, what is the optimal life length of a drug? And does it come at the cost of margin, of gross margin? Maybe a product that has a longer life carries with it a lower margin. Am I thinking correctly there?
So this is a super critical question when understanding EQL. So if we start with the lifespan of the product, so what we focus on are products where the patent expired long ago. Where we have lots of products where patent expired in the 1950s, the 1960s, and so on. And then, of course, when patent expires, there is little decrease in sales initially, but we have decades of sales data to study, and these products are, in pharma language, they are called legacy products. They don't grow, or they grow with demography, you could say. They grow 2-3%, like the population, but they also don't decrease in sales. So this means coming back to our segments here, I always make the example of we build a company like you build a brick wall. So if you take the first two segments here, they are nice products with a stable gross profit, and the target is more or less that they will outlive us all, because these products, they have been selling in the Nordic market for 60 years, 70 years. You know, we have Covepenin, Atarax, products like this that the doctors, they have it it's in their hand to prescribe it, and it's not gonna stop. So this is the most important thing for us. And you know, when you build a brick wall, you put the stone. It takes time to build the wall, but once you put the stone there, it will remain there. So this is how we're trying to build the company, with sort of a brick wall of eternal cash flows. And then we're adding a little bit of, let's say, sugar on the top here with the branded products. There is not necessarily a trade-off, I would say, in lifespan of a product and gross margin. But for us, if a product has an expected lifetime of 5 years, that is way too short for us, then we will not do it. And that is also interesting if you are more into the sort of accounting part of investing, when looking in our intangible assets. So whenever we develop products, we capitalize and we build our intangible assets. And we are super picky with what we do. So everything what is there are products that fulfill our very strict criteria. Products that we believe will be selling and outlive us all.
And where does Mellozzan fit in that picture? One thing, how was the sales of that, the development of that drug been, and where does it fall in this? Is it a drug with a long life?
So Mellozzan is here in the branded segment. So it is not one of these legacy products that has been selling forever and ever. So it is, you could say, a little bit of an odd animal in our portfolio. Mellozzan is one of these products that we developed as a generic to a melatonin-based product, you can say, that's been selling in Sweden for about 20 years. We have launched it already in Sweden, and we are selling for 2 million euro or something like that, with quite good margins. The big thing for Mellozzan is that children and adolescents with ADHD who also suffer from insomnia, which are basically all of them, because if you have ADHD, you generally have quite an active brain, and thereby you have difficulties falling asleep. In continental Europe, there is no pharmaceutical product for them. So now we are launching Mellozzan together with the best ADHD companies per geography. And we have just launched in Germany, Austria, actually, here just a few weeks ago. And Germany is one of the markets where I'm not going to say I prognose a huge sales development, because that would be promising too much. But I'm very hopeful, because here we are just entering an already existing market. So here in the retail and hospital segment, it's quite easy for us to forecast. When launching an entirely new product in a new territory, it's about changing a behavior. You need to inform all the doctors. You need to make the parents of the ADHD children comfortable with giving them a sleeping pill. This can be something stigmatizing as well. So we're hoping that we have selected the best partners who will make it a big success. But just as an example, Sweden is a demography of about 10 million people, and the originator in Sweden managed to build a market of 40 million euros based on these 10 million people only. So if we think of the fact that Germany is 10 times bigger than Sweden and do a little bit of math, you can at least realize that the potential is big.
Right. Yeah, exciting time for Mellosan. Switching to capital needs, let's talk maybe a little bit about M&A and capital expenditures in general. For both growth and expansion, do you think that you need M&A? You haven't been very active in that area, but I wonder if that is something that you would like to tap moving forward as to realize some more growth.
You're absolutely right, Renato. So my view, our view on growth, how we're growing this company, is that we have to take responsibility of our own growth, organic growth, and we do that by always adding new products to our pipeline. So without a single M&A, I am able to promise a good growth development and feel that I really have the products to support that. M&A, I view like a sugar on top for us. We do it when we find good things at good multiples. That's when we do it. And we have actually done, you could say, smaller asset deals. You could say we did actually one in the autumn where we're launching some products here now in the springtime. We are quite active in looking for targets, but we are also very, very picky also when it comes to M&As. So that's how I view that. And when it comes to the capital need, I would say that the way I do the liquidity planning is more or less, I mean, we are a growth company. We want to grow. If you want a dividend company, I suggest look elsewhere. We want to reinvest the profit we make into the business. We have lots of good ideas, and we think we can keep growing. So this means that when I do the liquidity planning, I always try to plan it such that more or less all free cash flow that is available, with little buffer, of course, is reinvested into the business so that we can keep growing. And let's see how long we can do that. And when it comes to M&A, like I said, we are constantly looking. By the way, if somebody knows of something good, please just give me a call. So we would not see in this moment an equity financing of that. So there is no equity need in EQL. That is also very interesting to know. So no new issues, inga nyemissioner. So a potential larger acquisition would be more or less debt financed.
When you look at things to acquire, do you look at what type of companies would that be? Would it be distribution companies? Would it be some company that has a client network that it's interesting to you? Where do you find that sweet spot?
So when we go hunting for acquisitions, we basically hunt for, you could say, to simplify it, two different types of animals. Asset deals, which is, and it's quite common in pharma. And what you do then is you just buy a product or a portfolio of products from a competitor and lift it right into your business. That's beautiful in the sense that you get an instantaneous growth, right? You just get the sales right into your books, and you already have the OPEX platform in place. We already have all the infrastructure in place to manage such a portfolio, so it will not drive any additional cost. That's on the upside. On the downside, it will only give you growth for 4 quarters because the products are not growing. So when you compare quarters, it will give you growth for 4 quarters. It is nice, but we want long-term growth. So upside and downside with asset acquisition. We're also looking for companies to buy. And then we're generally looking for companies which are active in a geography that we don't know so well. So they would bring in expertise in a new geography or some functional area, something very close to what we are doing, but not exactly. Some company that's understood something what we have not really understood that we can learn from and add another growth derivative.
Interesting. Going back to the sales figures, how do you, when you look at this, so you have a pipe of how many drugs are that you still have in pipe for the remainder of the year? You say like 3, I think, right? You still have drugs that are coming to the market this year.
So the plan this year, and bear in mind that our year starts 1st of April, so it's a little confusing. But the year that starts with 1st of April, we plan to launch in total 7 new products.
Right. When you look at these products, I am assuming that you also factor in some level of sales that you want to achieve. Could you maybe just elaborate very shortly about that?
Yeah. So our current 12-month sales is roughly 265 million SEK. We have to go to 365 million SEK in 12 months to be able to deliver on our 5-year plan. This means that we need to add 100 million. That is quite much. How are we going to do that? So we're going to do that by what Renato just said, these 7 products that we're going to launch during the year. They will add on sales and close a part of that gap on 100 million. Secondly, we launched 8 new products in the quarter 4. Going in now to the year, we have full sales effect of those products. They will close another large part of that gap. Finally, we had quite many stockouts in the last year due to this antibiotics crisis. I foresee a much, much more stable supply chain in this year, so fewer stockouts.
All right, Axel, thank you very much for the presentation. That is all for now. Thanks.